Forget the Fed. Everyone's acting like crypto can't move until Papa Jerome Powell gives us the fabled rate cuts. But what if I told you we can still go vertical? Crypto can have its moment in the sun even if rates stay higher for longer. How do I know this? Because I have proof, because we've seen it before. Of the greatest bubble of all time happened during high rates. So give me a few minutes, I'll show you why the next leg of this bull run might be closer than you think. Get your nerd glasses on, it's time for a history lesson. Let's go back to the 1990s. Music was still good, the internet hadn't ruined our lives yet. It was good times, and the height of the dot-com bubble was well in swing. From 1994 to 2000, the NASDAQ surged over 500%, marking one of the most explosive tech bull runs in history. But here's the part most people forget. Interest rates were between 4 to 6% the entire damn time. In fact, by the time the market peaked in early 2000, the Fed fund rate was 6.5%. The inflation situation was the same as we have right now, by the way. CPI was above the Fed's 2% target for most of the period, even peaking near 3.4% in 2000. That's some information to digest right there. And despite all that, tech was unstoppable. People made gargantuan sums of money. Capital flooded into the markets, chasing every shit stock you could possibly imagine. Startups were going public left and right, pets.com and all that kind of stuff. The internet was transforming every industry, and investors wanted a piece of the pie. AI and crypto today, by the way. Back then, no one waited for the perfect macro setup. They followed the momentum of tech and innovation as markets went higher. And you know what? That same kind of energy is here, baby. The belief that tech can reshape the world, man, is exactly what we're seeing today. Crypto and AI stocks, robotics stocks, probably energy stocks for all that AI and robotics stuff, is going to go way higher. Now, if high rates and inflation weren't enough, the late 90s were also packed with geopolitical chaos. The world was so peaceful back then. Nah, dog. 1999, NATO launched airstrikes during the Kosovo War. War in Europe! Ho, ho, ho! Marking one of the biggest military operations in Europe since World War II. The US was also locked in a long, grinding standoff with Iraq after the Iraqi invasion of Kuwait, complete with air raids and sanctions and no-fly zones. And then Russia, fresh out of the collapse of the Soviet Union, baby. Oh, it was a mess. They suffered a full-blown financial crisis. They sent tanks to take out the parliament. It was a mess, man. Financial crisis in 1998 in Russia sent shockwaves through global markets. And guess what? Tech stocks didn't give a shit. They just kept pumping higher for their 2 years. The year before that, the Asian financial crisis, the end of all things, took down currencies and economies across Southeast Asia. It was a turbulent decade by any measure. But even in amongst all that chaos, tech didn't stop growing. The US tech sector didn't just survive, it thrived, went on to disgusting heights before putting in one of the worst bear markets in recent memory. When a transformative technology is taking over the world, the geopolitical turmoils turn into speed bumps. The truth is, innovation has a way of outrunning almost every single obstacle, whether that's high interest rates or inflation or geopolitical uncertainty. And we are 100% in an innovative bubble right now, and it's just starting to blow up. Bubble's gonna get way bigger before it pops. During the dot-com boom, even though borrowing was expensive and inflation was above target, investors chased the promise of the new digital era. Does it sound familiar yet? AI, crypto, war in the Middle East, war in Ukraine, carry trade for the yen, all that bullshit. It's all the same stuff, just happening over again. They weren't fixated on the Fed's policy moves. If crypto degens of today are looking for the next dog coin or cat coin, the risk takers of the early internet era were rushing to take part in the new .com company, buying shit like pets.com. That was the meme coin of the 90s. Guys, before we get into the rest of this story, it's a very important story, so you need to listen up. I want to let you know real quick, if you want a great place to trade crypto coins, it's Femex, okay? One of the longest standing crypto exchanges in the game. It offers unmatched liquidity, freedom, and security to traders worldwide. Doesn't matter where you live, you can use Femex. And guess what? Insane offer right now, because my link is going to give you a huge advantage. VIP level 2 access from day one. That means 50% off your spot maker fees, 40% off your futures fees. On top of that, Femex is rewarding new users with up to $30,000 in trading and deposit bonuses. No gimmicks, no BS. The more you trade, the more you deposit, the more you earn. So it's your shot to maximize every dollar that you put in. Don't let it pass you by. It's a limited time offer. There's a link right down below. Go check it out. Okay, so look, guys. The conditions today really feel like a deja vu of the 90s, right? I know a lot of you guys are probably young in the 90s. I was too. But it's well documented what happened and what was going on the macro scene. Crypto and AI aren't just technologies, they're foundational shifts and reshaping entire industries, just the way the internet was back in the 90s. Okay, the internet was a big deal back then. Now it's just, oh, the internet. And back then it was like, holy shit, the internet. Just like the internet in the 90s, AI and crypto represent opportunities so big, so unimaginably bullish, that capital flows in regardless of whether the world is burning down metaphorically or even figuratively. Institutional investors are piling into Bitcoin ETFs. Treasury companies keep launching for Bitcoin and shitcoins. Companies integrating AI at scale. Figure AI with their robotics. Anthropic with their AI. Tesla and their robotaxi. I mean, holy shit, guys. Governments are exploring digital currencies, strategic reserves, passing regulations. All are signs that innovation is the real market driver right now, not short-term rate cuts. When transformative technology is at play, markets look beyond the immediate economic pressures. They price in future adoption. They price in the bull case, and they price in the gains that come along with that. That's why the fear of high rates, geopolitical shocks. Yeah, short term, there's trading opportunities you can make around all this stuff. Don't get me wrong, but it's not going to stop the train. Unless like literally World War III breaks out and everyone gets nuked, and then we don't have to worry about our crypto coins anyway because we're all dead. Perspective here, guys, okay? All these shocks rarely stop a true innovation from powering forward. Look at the 1990s. Again, it was just full of all kinds of chaos, economic, financial, war. None of it stopped it. Market went up for years for insane gains. Now you can blame the market for whatever bullshit, but the truth is rate cuts and hikes are just one part of a much bigger equation. What drives markets is a mix of liquidity, forward expectations, adoption trends, and where capital sees the biggest long-term upside. During the dot-com era, you see, investors, they weren't obsessing over every little Fed move. I'm sure some of them were. I mean, geez, if we had social media back then, I'm sure we would have been obsessing over every little Fed move a hell of a lot more. Imagine back then just sitting around in chat rooms, no X, no YouTube. Dark times, man. Dark times. We're in the enlightened times now, I guess, or at least we're all just chronically addicted to our phones. It's a different story. Anyway, these people were focused on the structural shift happening right in front of them. The good investors were. They saw the forest from the trees. And it's the same story today. The structure looks strong. M2 money supply, the rising tide that lifts all boats, is going up. Overall liquidity is still rising and is expected to rise for quite some time. Every day, more and more companies are declaring their Bitcoin treasuries. The business cycle still has a long way to go as well, by the way. The credit cycle still has a long way to go. The average bull market lasts 6 years, and we're, well, five years or whatever, but we're only 2.5 years into this one. We have at least 2.5 to 3 years more to go. US listed Bitcoin ETFs now hold around 6% of the total supply. BlackRock alone, they control 3.25% of that supply. It's a multi-trillion-dollar asset manager holding a big chunk of Bitcoin on behalf of their customers, obviously, but still a big damn deal. Something unimaginable just 5 years ago. BlackRock Bitcoin ETFs, the most powerful financial institution in the effing world, is in the game, and the CEO of the most powerful financial institution in the world, Larry the Finkster, that dude's the biggest Bitcoin shill now. Thanks, Larry. Appreciate it, man. Then there's tokenization. According to reports, we're looking at around $24 billion in tokenized real-world assets across 194 issuers. Today, that's not bad. What if I told you it's going to be 30 effing trillion by the end of the decade? 30 trillion. From 24 billion to 30 trillion. You don't think prices are going to go up slightly when that happens? What if it's only half right? A third right. Oh, we're only going to $10 trillion of real world assets on chain. Holy fuck, guys. The rails are being laid. The capital's flowing in. And so here's the takeaway. A Fed pivot, cheaper money, assuming that it's all done calmly, not market panicking, the Fed panicking, that kind of stuff. Sure, we'll take it. But we don't need a Fed pivot for crypto to move. And the 90s dot-com boom proves it definitively. You can have high rates, 4 to 6% rates, and markets absolutely effing rip. The last time we saw a tech boom this powerful, and AI and crypto are the trades right now. Robotics too, but there's not a lot of ways to get good exposure to robotics. It's a different story. But anyway, those are the trades right now. Markets soared in spite of high rates, in spite of inflation, in spite of some of the most insane global instability you could possibly imagine seeing. Because when a new technology is rewriting the rules, capital doesn't wait for perfect macro conditions. They just effing ape. It moves toward the future. Crypto and AI are doing exactly that right now. How long does the party last? How long till the fat lady sings and the cows come home and the whatever other bullshit? Could be a few more years. People are underestimating the potential for this run. We could not top until 2028, 2029 for all the stuff at the same time, right? The money is flowing in, and the narrative is shifting from if to when. Waiting on Papa Jerome to save the day might feel like the right thing, but in reality, the market seems to not really give a fuck. And the market might already be halfway through its next leg up. And here's the kicker. None of the usual top of the cycle signals have even flashed yet for Bitcoin. And of course, most altcoins are still in a bear market situation, basically. We're not seeing peak euphoria. We're not seeing retail mania. We're not seeing stupid, crazy IPOs in crypto that are worth nothing. They're dog shit, right? But they go to trillions, or not trillions, tens of millions, billions or whatever, right? As well as robotics companies, AI companies. You know, AI.ai, the company, does nothing, but it's a website address and it goes to tens of billions of dollars. That's going to be the top guys. That's going to be the silly season, okay? And that's not to say it's all smooth sailing, but it does suggest they still have a lot of room to go. But Lark, what if World War III erupts? We have bigger problems and we're all probably dead, okay? So when it doesn't go nuclear, well, hey, at least we got Bitcoin still, man. Neutral, borderless asset, doesn't rely on trust in any single government. Good asset to hold. No matter what you say, Bitcoin's always a good thing to hold on to. And if things really go sideways, then this is the one asset that you can take with you anywhere. Try stuffing a couple kilos of gold up your ass and see how that goes. Nope. This ledger, though, it's gonna slide up there real nice, okay? Bitcoin's an exit plan. Oh, sure, gold's great, okay, but it's got its problems. Anyway, stop obsessing over every Fed headline like it's the main character. It's a character, but the real story is happening in front of us. And at the end of the day, F the Fed, F their rate bullshit, F their money printing. They're the problem. They're not the solution. AI and crypto are the real robotics too, and energy to power all that shit, you know, those things. They're the real narratives right now. There's nothing that Papa Powell can say or refuse to do to stop this train. Thanks for watching.